Indian economic updates. Finance Minister Nirmala Sitharaman stated that the government is pushing all levers to sustain India's high growth rate, which has been acknowledged by the IMF and World Bank. Both institutions forecast India will remain the fastest growing major economy, with the IMF predicting growth rates of 7% for 2024-25 and 6.5% for 2025-26, surpassing global averages. The World Bank also raised its growth forecast for India to 7% this fiscal. Sitharaman emphasized that India, with its young population, can lead Industrial Revolution 4.0, driven by AI, machine learning, and big data. She highlighted the PM Internship Scheme, which aims to bridge the employability gap, especially for economically weaker students, and stressed the importance of imparting financial education from childhood to improve money management skills. India's National Pharmaceutical Pricing Authority, NPPA, has raised the ceiling price of 11 essential drugs by 50% to ensure their continued availability, citing paragraph 19 of the Drugs Prices Control Order. The decision was made after manufacturers sought price hikes or threatened to discontinue supplies due to rising production costs. These medications are vital for treating conditions like asthma, tuberculosis, glaucoma, and mental health disorders. NPPA emphasized the need to balance affordability with accessibility, stating that price regulation should not result in drug shortages. Steep discounts on premium smartphones from Apple and Samsung have boosted sales in smaller towns and cities, surpassing major metros this festive season. In the first wave of sales, Tier 2 cities and beyond accounted for 70 to 80% of premium smartphone purchases, up from the usual 50 to 60%, driven by high consumer aspirations and deep discounts. Despite a 3% decline in smartphone volumes, sales value grew by 8% to $3.2 billion, led by older flagship models. IDC India noted that 60 to 65% of Apple iPhone sales are through financing schemes, particularly in Tier 1 and 2 cities, while Tier 3 and 4 areas face affordability challenges, despite growing demand for premium brands. The festive season is anticipated to revive passenger vehicle sales in India, helping to alleviate high inventory levels that have built up after a sharp slowdown in demand this fiscal year. In the first half of the fiscal year, sales of cars, sedans, and utility vehicles increased by 0.5% to about 2.08 million units. However, commercial vehicle sales fell by 4.2%. Positive trends are emerging, with retail sales of passenger vehicles rising by 30 to 35% in early October compared to the previous year. Strong rural demand, driven by good monsoons and harvests, is expected to further boost festive sales, despite the overall growth in passenger vehicle sales projected at less than 5% for FY25.